There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome to the Trading Justice Podcast presented by Tackle Trading. If you're interested in learning about trading stock, options, currencies, or commodities, or maybe taking control of your financial future and getting sick of the runaround from Wall Street and your financial advisor, are you sick of losing money in bear markets and neutral markets? Are you sick of not making any money in your traditional retirement accounts through the entire first half of 2015? Well, if you're sick of all of that and you want to control your financial future, then we got a great place for you. It's called TackleTrading.com. There at TackleTrading.com, you're going to learn from some of the finest coaches and mentors and trainers in the world. Gino Poor, Noah Davidson, Tim Justice, and myself, Matt Justice. We're the best out there. We're going to help you get out there, take control of your financial future, getting into the game one trade at a time. Tim Justice, my co-host, how are you today?
You know, I am so excited to be here, and I'm doing great. Had a good weekend, 4th of July weekend, a lot going on around the world as well as locally for me, and, I'm doing great, Matt. What an intro. And by the way, I do agree. We do have a pretty good team. I think it's pretty cool.
Pretty excellent team. There's no doubt about it. And, Tim, I've been excited for this podcast for the last week. Bringing Solon back for I believe this is round 3, Solon. Is that correct? Yeah. I think it's our first third guest ever. That's how hot this Greek topic is. But I've been looking forward to this for the better part of the last week. A week ago, just to catch everybody up, a week ago, basically Greece and the IMF, the EU, the ECB, basically Greece and the rest of Europe, really couldn't find an agreement to, release the funds, the $200-odd billion of funds for the IMF and the ECB have loaned Greece. Most of the funds going back to pay off their creditors, not to actually, improve their economy or to get out of the rut they're in. Basically printed money to pay back the IMF with interest. It's a great deal for the ECB, the EU, and the IMF there. But they decided to walk away from that, and the Greek government announced a referendum to vote on the so-called deal that the Europeans had laid at the Greek foot table. And basically it was to take this really, really tough austerity measures, cutbacks on your pensions, cutbacks on your social programs, basically cutbacks on everything out there immediately or default. And the Greeks held a historical vote today, democracy at its finest. So I want to bring in Solon to tell us about, just remind everybody, Solon, kind of your heritage a little bit and why this is important to you. But Solon, the Greeks voted no. They voted no in not approving the agreement or the proposal from the IMF and the ECB and the EU to basically take stiff austerity measures. We've talked about that in recent podcasts. But Solon, what does this vote from a heritage standpoint? What does this vote mean to somebody like you?
Well, it's a huge vote. It's for the Greek people. The Greek people have gone through 5 years of austerity. Mm-hmm. And I myself am of Greek descent, born and raised here in New York City, but I've been back and forth to Greece on vacations. Most of my family is back in Greece. So when I do see this come up in the news, it connects to me deeply from a heritage perspective, but it's also huge when you look at it from an economic and political perspective. I am a political science and philosophy graduate of Hofstra University, and one of my areas of focus was European governments and EU politics. And for my junior year, I took an entire year of EU politics, and I did my final thesis paper on the Greek debt crisis in 2010, when it was kind of in its infancy and starting to get traction.
Yeah, it was very, very
and,
new.
Back then.
Yeah, a couple of questions
back
from
then,
me.
I was mostly reporting on deficits.
Yeah, a couple of questions for you, just kind of pertaining to that, Solon, because I want to get to kind of your perspective, being from Greek heritage. You have a lot of Greek families still living there. You studied EU politics, political science, all that. There's a lot of people out there, now that we're kind of seeing the depths of the debt crisis. There's a lot of people out there that basically are saying that, given what now Greece is going through, it's proving that the EU model of a joint currency, politically, currency-wise, and whatnot, that the EU model, and especially regarding the euro, has shown to be a failed model, especially with the debt crisis that Greece is going under, and really that kind of leads into the rest of the European Union as well. Has this Greek situation, in your estimation, shown the failure of the EU model?
Definitely, and I believe most economists have come out and have been very outspoken with this whole model of one monetary policy but multiple fiscal policies, and you have a very uneven playing field. You have Germany, which is one of the more developed nations, and France as well, which is one of the more developed nations, more focused toward agriculture than industry, which Germany is very industry heavy. And then you have these peripheral countries in Greece, in Spain, in Portugal, in Ireland, who aren't as built up industry-wise, and they can't keep up with the main players of Germany, Italy, France, Belgium, and Netherlands. So you're seeing a complete failure, structural failure in the EU, and these peripheral countries, the ones that we call the pigs, kind of an interesting name there, they're falling behind. They can't keep up. They can't keep their economies as competitive as the other European nations, the Central European nations. So you're seeing them get into debt. They can't really devalue their currency. And that's actually the basis of a report coming out of Goldman Sachs recently, and one that I shared with the tackle trading community on the club forum, that guess what, with Greece's internal devaluation and the inability to actually devalue their currency, they can't return to competitiveness, and that's hurting the Greek economy. And it's kind of like trying to run a race with a chain around your ankle. You can't really get up to full speed, especially with not being able to control your own monetary policy, not being able to control your own currency and issue your own currency.
Mm-hmm. Tim, I want to bring you in here real quick. Solon talks about how you have all these different countries in the European Union who basically have their own fiscal policy, but monetary policy is led by the European Central Bank, which controls everybody. And you basically have these emerging markets, which we'll call the pigs, and then you have these developed countries like France and Germany at different stages of their, economic development. And so the pigs can't keep up with the industrialized nations, and so it's really creating some kind of disharmony in the entire European Union. Tim, would you agree with Solon in terms that this Greece situation has really pulled back the layer of the failure of the EU?
I think the EU was a good intention, when they started it, and I think it's been flawed from the start, quite frankly. I think trying to force countries with such different, not only histories, but really cultures, to get along, not only get along, but also support each other, who knows? I mean, I don't think it was a good idea. We are now, I think Greece joined the EU in 2001, I think, about 14 years now, and they had a big run up, and when times were good, but you're pulling back the layers of the onion right now, and you're looking at the core of what we're doing here, and I don't know if it's going to last. I know a no vote here would be pretty catastrophic for the EU. It's not just Greece, though, Matt. You had mentioned the pigs. Portugal, Italy, Spain. I mean, there's a lot of countries there that,
Greece, yeah.
This is definitely going to affect.
Yeah, no, I definitely agree with that. You guys know me very well, Solon. You've known me for, over a year now, and Tim, obviously, you've known me forever. I've been a strong proponent of Greece leaving the EU for a couple of years now. I've always felt that it was going to be almost impossible for a country like Greece that is in a vastly different era, different industry, different status of their economic development to maintain any degree of solvency in any capacity, because even the loans they get today, they just go off to pay off other creditors out there. They actually don't go to actually develop the nation of Greece. And so I've been a strong proponent, and honestly, I know a no vote, and that's what we're going to get today. It's not even in question anymore. It's going to be about 60-40. 60% of the Greek population is going to vote no to the tough austerity measures of the European Union. 40% voted yes. I'm almost guaranteed that the millennial vote went to the no, and probably
85%.
It was 85% went to the no. That's not shocking in any capacity because they don't have a job, and a lot of it is because of these tough austerity measures they can't really put back into their economy. So I think it's a good thing long term. That does not mean there is not going to be tremendous volatility, tremendous uncertainty coming out of this, because I don't think you're talking about the death of the EU here, at least not yet. But it shows substantial weakness to that type of economic and political model, and so it's going to be interesting to how the Greece situation kind of resolves. But honestly, I think this is probably what a country like Germany, when it's not talking politically, probably wants, and I think it's probably what is good for Greece, to be perfectly honest with you. But let's talk about, now that we have this no vote, guys, we obviously have some, impact to the financial markets, right? Let's first talk about the currency itself. In terms of the currency, Solon, what was the historical currency Greece used for decades and decades and decades?
Well, they were using the drachma, and that was their currency, and they were able to devalue it.
Do you think we're going back to the drachma?
Not just yet. As Varoufakis wanted to make clear for the past few days that, and both Varoufakis and Tsipras wanted to make it clear what the no vote actually meant, because it felt for about 3-4 days after the referendum was announced, people didn't really know what no meant. But no just meant no to the austerity measures. It didn't mean no to the European Union. It didn't mean a Grexit. It didn't mean going back to the drachma. It just meant that we're not going to take the austerity measures. We're not taking the deal. And we want to go back to the table and renegotiate it and try to get some kind of concessions.
But that only works, though, if the Europeans see the no vote the same way Varoufakis sees the no vote. And Tsipras sees the no vote. They see the no vote as a new bargaining chip, a new negotiation measure to either get a softer deal or to default and stay in the euro and negotiate another deal. So you have those couple scenarios where this is just a negotiation tactic, a bargaining chip to a certain extent. But again, I mean, Tim, if the Europeans don't soften their stance, and from what I have seen out of Germany today, after the no vote was kind of rendered, is the Germans are actually more, steadfast on maintaining austerity measures and maintaining the deal and the parameters of the deal that they laid out earlier this week. So let's say the Europeans don't, come to the bargaining table the same way the Greeks think that they should. How is that going to impact Greece in the future, Tim? If the Europeans don't come to the middle a little bit, if the Greeks don't come to the middle a little bit, I mean, what happens next, Tim?
Well, honestly, I don't think Greece's future has to depend on this deal. They're already at 25% employment, 50% employment for people 18 to 25. I mean, they already have an economy that's in flux, up and down. I think that's why you're seeing so many people support the idea of leaving or a no vote. I don't think it really has an impact. I think the better question is, how does it impact the EU? How does it impact the relationship the EU has with other countries that are going to be going into these same situations? Because if you allow other countries just to kind of pull out and leave, I mean, there is no EU. I think there's a bigger question there outside of just Greece. Because Greece, Matt, if I was living in Greece and I had a political leader that was going to vote for me, I might send him a letter and say, hey, vote no. I don't think it's good for Greece to be a part of these debt-driven measures, and maybe leaving is a better deal for them.
Well, I think leaving. See, here's the thing that's been going on the last 6 years in the world. Everything is a constant bailout. Everything is. Whether you're talking about a currency bailout, when you're talking about all the debt deals that were done in 2009, 2010, when you're talking about quantitative easing at the ECB level, the FOMC level, the Bank of Japan level, when you're talking about the 535 times countries have lowered interest rates since 2009, when you're talking about the currency wars, everything is a bailout right now. And there's really no end in sight of the bailouts. And historically, you can't do that. You can't. I mean, honestly, guys, I'm starting to see the death of the fiat currency system in all of this, because I think this goes a lot deeper than Greece. I think it goes a lot deeper than the EU, and I think it goes a lot deeper than a lot of people are talking about in the news today. I think you're starting to see, in terms of the fiat currency system, which has been around really since the early 1970s, since about 1971, where you really left the peg system. When the dollar was pegged to gold, then you went to a fiat currency-based system, where it's basically called a free-floating currency system. And now that you're starting to see these constant bailouts and how they're kind of done with printed money and fake money, it's honestly, I don't know if you can say it's the death of fiat. But I think you're starting to see the ugly inner shell of the fiat currency system, and there's a lot of people that think fiat. I don't know a lot of people that think fiat currency systems are a great currency system, but a lot of people think it's sufficient to what our needs are in 2015. I disagree with that. I think fiat is going somewhere. I do think fiat will be replaced at some point down the road. Now, whether it's 5 years, 10 years, 20 years, I don't think anybody knows that for certain. But one of the reasons why the central banks are so willy-nilly with their currencies and their printing policies and their debt policies is I do believe that they believe fiat is going somewhere as well. Whether you move to another fiat system is another thing altogether. But the current fiat system is, I think it's under attack right now.
Yeah, I honestly, the entire idea of currency is under attack right now because of technology. It's something that we've talked about quite a bit. And Solon, I want to bring you in on this. One of the most interesting things about the Greece situation, Matt, is when they shut down the banks, people went to Bitcoin. And
in droves last week.
And there wasn't enough ATM available for them. I mean, there was not enough Bitcoin ATMs where they could pull currency out. And it makes...
If they would have been a part of tackle trading a year ago, they probably would have been on from the ground zero, since we were talking about that a year ago. But keep going.
Don't you think that at some level, this is telling everybody else in this world, hey, you can't rely on government. You cannot rely on these centralized systems, and you have to step away from it. Whether it's Bitcoin or something else, whatever it is. I mean, they can just shut down the banks, man.
Well, which they did. I mean, it looks like they're going to open up the banks on Tuesday, and that'll be interesting. But that's with what money? If they don't have ECB money, which they're meeting on Monday to determine that, which is tomorrow. But if they don't have ECB money on Tuesday, I think Greece has about enough money to maintain one day. I mean, that's how bad of a situation it is, and that's why you can't keep on just bailout, because all the bailouts do is pay creditors. It doesn't actually help the economy out in any capacity, and we've seen that. So, you look at another currency out there, like most people, in Greece, they're tied to the euro. That's what they use. That's it. And so they're victim to whatever the ECB does. They're victim to their quantitative easing policies, like Solon said. When you don't have the ability to value your own currency relative to other currencies around you, how can you improve exporting? How can you improve the economy if you can't improve exporting? So, it's going to be interesting to see what happens out there. But, Bitcoin, I mean, you saw it this week. You saw it just a run to convert euros to Bitcoin out of Greece, trying to, get outside what might happen with the valuations and go back to the DROC, or, what happens with the euro, because more than likely the euro is going to devalue here as well. So you saw Bitcoin, and Bitcoin was up 5% just today, Tim. I mean, just today, it's up 5% with the no vote. So it's going to be interesting. We've always said that cryptocurrencies are an alternative to the traditional fiat system, and I think people are starting to understand why we've been saying things like that.
Yeah, I mean, all of it is fascinating to me. I want to get Solon's take on the Bitcoin
quick, though, Tim,
thing.
Let's talk.
Solon,
let's take this in order, okay? Let's talk the euro. The euro, then let's talk the political situation, and then let's kind of get into kind of where the markets move from here. Politically, in terms of the euro itself, Greece leaving, I want to get both your takes on this. Let's say Greece leaves the European Union, which I know a lot of people do not think that's going to happen. I put it last week at about, this was last Monday, and this was before the vote was held today. I put it at about 50-50. I'm actually putting Greece leaving the EU and the euro at about 65% right now. So I obviously think it's going to happen. I don't know if it's going to happen next week, but I do think this is going to happen. I do think a no vote today leads us down a road that takes Greece to leaving the EU. The reason, I don't think the Europeans are going to actually come to the table in terms of what Tsipras and Varoufakis, what they want out of Greece. So, but let's say they leave the European Union. Where does the euro go from here, guys?
Let's let Solon take that one first, and then I'll share my opinion.
Well, I do agree with you, Matt, because I know I kind of made a complete 180 since our first podcast. I was very against Greece leaving the euro, but now I'm kind of realizing that a full recovery just isn't possible with Greece staying in the Eurozone. They could stay in the European Union, but they need to get their own currency and be able to have their own monetary policy in order for recovery. Now, for them to stay in the euro, whether stay or leave, I'm putting it now at 50-50. It really depends how the creditors react to this no vote. I want to see how Joran Dijsselbloem, who is the finance minister of the Netherlands, and I think he's the chief of the European Commission. There are a lot of players involved here, so I want to see what their reactions are. I know Dijsselbloem has been very hardline. You have to take the austerity measures or nothing. He's been very vocal. Schäuble has been very vocal.
Well, has Schäuble ever
Schäuble has been very vocal. I don't know. He's a very hardliner,
he's an entertaining
to the extreme.
Guy, no doubt about
Merkel
that.
has been very soft. Yeah, Merkel has been soft. It looks like the IMF, through a lot of pressure from, I think, the U.S., because it's been coming out that the U.S. kind of pressured the IMF to back off a little bit, to release the report, because the EU, depends how conspiracy theorist you want to get, the EU didn't want the IMF to release the report last week where they basically said, hey, if Greece got a 30% write-down in their debt and they were given a 30-year grace period, they would still have a hard time paying back that debt. So you're seeing a lot of different factors coming into play now. But I do believe that the EU is going to have to soften their stance a bit if they're going to renegotiate the deal. And I do think that eventually the EU is going to make concessions, and this is going to be a reason for multiple phases of QE down the line, because the European QE was set at 1.1 trillion euro back in January, which was roughly 200 to 300 million euro higher than what was expected. Part of that was probably to cushion a Greek bailout, but I do believe that more QE needs to come in down the line in order to save Italy, in order to save France, in order to save a lot of these other countries that are massively in debt. I've read an article today that Italy's paying 75 billion euro a year just in interest payments on their $2 trillion debt. So,
that's my point, though, Solon. I mean, that's my entire point. I mean, I think the EU is starting to realize that there's zero chance that these debt burdens can ever be paid. And so it's like, how are we going to settle this debt burden when nobody actually thinks that there's a cure to the problem? I think that's why you're seeing such hardline stance out of the Netherlands, out of the IMF, out of Germany with Schäuble and whatnot. So I think when you're looking at this debt problem, it's so deep and detailed that the Europeans and the IMF and the ECB, they're starting to take a much harder line stance because nobody really expects it to ever be resolved to a certain extent. So it's just going to be an absolute fascinating discussion, fascinating thing to see in the future as we see this evolution go on with the Greeks. I think it is good for Greece to leave the EU. I think it's their only cure. I think as long as every second that the Greeks stay in the EU is 1 second longer times 10 that they will not be able to get outside from their debt burden, because they're just not allowed some of the measures that you need to take from an economic perspective, from a monetary perspective, to really get out of the debt burden that you're under. I mean, you think about some of the other situations that were in debt up to their eyeballs. Look at what Brazil did in the 1990s when they inflated their debt away through very, very hard, monetary policy. So it's going to be an interesting to see play out. I think this is a step forward in the right direction for Greece today. I think it is a step in the direction of Greece leaving the euro. I agree with Solon. That doesn't necessarily mean they leave the EU. Not every country in the European Union uses the euro, and I think you've seen a couple statements of that recently about if Greece does leave the euro, it doesn't necessarily mean that they have to leave the EU. I honestly, in my estimation, if I just play it out, I think in 6 months from now, Greece is no longer part of the EU. I don't think they're part of the euro. I think they will be part of the EU, because if they left the EU, then you're talking about dramatic political problems for Greece, and then all of a sudden you're the next Ukraine in the middle of a fight between the Russians and the West to a certain extent. So, like I said, I think it's going to be fascinating to watch play out. I honestly feel like we should all tip a glass down the old barrel later tonight in salute to our Greek democratic brothers and sisters over there. By the way, the euro just opened up and it gapped 110 points underneath 110. And I do believe I will be shorting it in very, very, fairly soon.
Yeah, close to 126 now.
I was short on Thursday, and I closed it because I didn't want to deal with the news.
I think we're all that way. The biggest one, though, is, the one that, I don't think it should be too confusing, but the dollar yen. The dollar yen gapped down as well, and it broke the 122.5, currently at 122. I might go short euro, long dollar here. I don't know.
Well, what if there could be a potential opportunity to shoot the gap with the dollar yen?
Yeah, that's kind of what I'm thinking. I'm thinking, and let it play out a little bit, but it just off the top of my head, euro dollar, it's down. Anything under 110, I think you're comfortable with. And underneath 110. So you got 20 pip risk there on the euro dollar.
That pig is going to $1 at parity. So whether it's going to happen this month or in the next 3 months, I don't give a shit. That thing is going to $1. It's going to play at parity or below. So really, it's amazing to me how a trend and a pair or a price can kind of go into neutral mode while you're dealing with all the news, and you still know eventually that thing is going to go down.
I also think the Aussie dollar is going to go down too, gapped underneath 75 cents. That's the low it's been since, honestly, 2009, May of 2009. That should go down further. Yeah. So my initial reaction here is short euro dollar, long dollar yen, little pair trade.
I got to ask you guys a question, and I've been thinking about this for a couple of days now. Everybody's talking about how Greece can't repay the debt. Which country can? Every country you can imagine has been going into debt the last 6-7 years at levels that are
$18 trillion debt. They can't pay down their debt.
The U.S. is never paying that debt, Matt. Ever. Well, they're not paying that debt down.
There's no plan to pay down the debt.
No, there's got to be a plan.
That's the difference between Greece and the U.S., though, and that's what we've been kind of talking about for the better part of the last the first 30 minutes here, is when you talk about Greece getting out of their economic problems, or it's because they don't have control over their monetary policy. They don't have control over their economy. They're a slave to the European Union and what the European Union wants, which I do not believe the Europeans want to cure Greece. I just don't think they want Greece to be the Lehman Brothers to, Spain and Portugal and Italy, to the others down there in the Mediterranean. Right. So, but the U.S., who is the number one debtor in the world, they can print money against debt. So they print money to pay off the interest on their debt, which means they can go into debt as much as they want, but they can print against the debt. When you're talking about Greece, they can't do anything like that. They're reliant. See how Greece gets money today is they go through taxes, which Solon has talked about on recent podcasts. Is their collection of taxes in Greece is atrocious at best. So they don't have a lot of taxable related incomes. They can't print money. The ECB is the one who has to print money and then loan it to Greece. And so Greece has to pay an interest on the loan to the ECB just to get money into their economic problems. So, you talk about what the U.S. can do. You talk about what Greece can do. They're just in two vastly different environments from a monetary policy. But this is the one thing I don't think is talked about enough. We've talked about it here, but Greece is in a vastly different economic development in their evolution of their economy than Germany is, than France is, and than some of the other countries in the European Union are number one, and some of the other Western countries are number two, like the U.S. They're just not the industrialized nation that these other economies are. They're not self-sufficient to a certain extent, as some of these other countries are, and to keep up with the Joneses, so to speak, Greece has had to spend a lot of money in terms of trying to keep up with the Joneses, the rest of its European partners, and it's led to the debt crisis. The European Union, really, I think the failed dogma here is the European Union and the model behind the EU of bringing these 27 different nations in the EU in all different stages of their economic development under a singular monetary policy. All about it was to facilitate international trade to a certain extent. Well, whose international trade? Germany's international trade, France's international trade. It wasn't so much about Greece's international trade. What Greece needs to do here, and again, this is not good for the Greece people over the next 5 years, but what Greece needs to do is leave the euro, go back to the droc, devalue the droc, make Greek goods cheap, and start building economic development from the ground up. Start building, instead of spending debt to repay creditors, go into debt to invest in your country, in your economy, in your industry. And yes, Greece needs massive taxable regulations and changes from that environment. You can't do that in the euro. You have to do that as a singular currency. So, in my estimation, again, I've said this before, I'll say it again. I love what Greece did today. Okay, I love the no vote. I love the millennials getting out there and saying, you know what? We're sick of having no jobs. We're sick of having no future. We're sick of being told what to do by Frankfurt and the ECB and the IMF, and we're sick of the large-scale institutional banks telling us what we can and cannot do with our own country and our own money and our own monetary policy. Let's go back to it. We are the goddamn birth of democracy, for crying out loud. Let's get back to our roots to a certain extent and pick it up a little bit. I love what they did. I completely
agree that they need to make a huge change. The only nation that really flourished in the past 6 to 9 months has been Germany. I feel like they did force the issue with the whole Greek debt crisis. I believe one of their long-term goals is to devalue the euro. Right now, it's going to hit parity soon. But what you've seen in Germany over the past 9 months is they had one bad quarter where they had a negative quarter. And from then on, with a constant devaluation of the euro, you've seen their exports pick up. You've seen their unemployment go down. Now I believe German unemployment's under 4%. And Germany's been flourishing. And in order for Greece to get back to the level that they need to be, they need to renegotiate their debt and restructure it. They have a huge shadow economy, So one of the major sticking points with the Syriza party with Tsipras and Varoufakis is that they have about a 40% shadow economy, and they're leaving about 8 to 10% of GDP, taxable GDP, on the table. So with that, if they increase the efficiency of their tax collection, they can easily post huge surpluses. Not huge, but around 5% a year, which is feasible in the near future if they're able to increase the efficiency of their tax collection. About 40% of the GDP is unrecorded, and about 8 to 10% of taxes that they should be collecting toward their GDP, they're just not doing it. And you're seeing Greece has actually been one of the major countries to reform over the last 5 years. One of the things I wanted to share was the ease of doing business rankings. In 2010, Greece was ranked 109 out of 189, or somewhere around there, nations in the world of ease of doing business. Now Greece is ranked at 61st. So they've put in the effort to implement reforms to make business much more competitive in Greece compared to other nations in the world. But the problem with Greece right now, and what Varoufakis mentioned in an interview a couple of days ago, was that a lot of companies, corporations, they don't want to invest in Greece right now. One, because there's an unstable monetary and fiscal policy in place, because you're seeing it this year that there's too much to pay back, and it's causing political instability. You're going to see it again in 2019, where they're going to hit the fiscal cliff again, because they're going to have to pay somewhere between 13 to 15 billion euro back just in repayments and tax and interest on the debt. And then in 2022, that number is going to jump to over 30 billion in that year. And with this constant political turmoil and fiscal turmoil and monetary turmoil, companies just don't want to invest in Greece. But if Greece steps away from the euro and are able to restructure their debt so it's sustainable, it gets to a level where they can focus on infrastructure, as you said, Matt, and start reinvesting in their economy, in their country, and then all of a sudden Greece becomes something where outside companies and corporations want to invest in, because A, you have cheap labor. I mean, when you have 26% unemployment at the moment, and it's rising, and you just can't do anything about it, that's cheap labor that countries do want. And you have an educated workforce, so it makes Greece something that's much more attractive for investors. So, and to go back to Tim's point, who's going to pay back their debt? I really don't think anyone is. You have Belgium that's at 106% debt to GDP. Italy is currently at, I believe, 132% debt to GDP. Cyprus is at 107. Ireland is at 109. You have countries with unsustainable debt to GDP levels, which is kind of where I think the whole Eurozone is going to go, with multiple phases of quantitative easing, where they're just going to kind of devalue the euro through political instability, but also through multiple phases of quantitative easing, and try to restructure the debt of all of these countries, and also increase their competitiveness in a globalized economy.
Well, great point, Solon. And I do want to bring up one thing you said, talking about kind of the ratios to debt to GDP. If you look at, say, and all of those are bad numbers. I mean, when you're talking, 107, 110, 140, well, man, we look at that European debt crisis, and we're like, man, can't you guys just pay your bills? From an Americanized standpoint. But then you think about, okay, here in America, we're over 100% debt to GDP. Mm-hmm. I mean, we're at very similar numbers to the pigs and the rest of the Eurozone. Our debt is 18 trillion. Our GDP is about 18 trillion. So we're about 1 to 1. Again, God bless America, because we get a print against debt, and we don't have to ask anybody to raise our debt ceiling, because since 1960, the U.S. has raised their debt ceiling 100 times. Since 1960, that's only 55 years. Since 1960, over 100 times we've raised our debt ceiling. And so, and the reason I bring it up, we here in America, we have a tendency to look at other problems elsewhere and be like, oh man, if they could just adopt our measures, if they could just be like us. Well, they kind of are just like us. We're all in debt. We're all in debt up to our eyeballs. The difference is they're at a different stage of their economic development, and we control our own monetary policy.
But for how long, though, Matt? I mean, we've been talking about the changing currency system for a long time. I agree with what you're saying, but how long do we control that? And how long does the federal central bank control all of their own destiny? I don't know. I think the one thing about this Greece situation to me that is very startling is it's almost like a precursor to everybody else's. It's just a reminder that we're in trouble.
There's always catalyst. Always catalyst. The problem is worse than reported. You know that is the problem. Okay? The problem is worse than reported, and that's why I said when we're pulling back the layers of this onion that we call the debt problem in the world, you're just starting to see the foundation of it. That's all you're starting to see is the foundation of how bad this debt problem is. And again, coming back to the fiat currency system, and that's why I said what I did, it's showing the ugly inner circle of the fiat currency system and the problems associated to it. And so, like, for example, during the subprime market, you had Bear Stearns go belly up in March or February of 2008. That was a catalyst that started showing us that, oh man, this problem is worse than we thought, but Bear Stearns was a smaller version of what was going on, the underbelly to a certain extent. And then you saw Lehman Brothers, which was one of the largest institutional firms in the U.S. They went belly up in June of that year, and you start seeing the volatility really pick up. And that's why I've always kind of seen this Greek situation as, yeah, we're talking $1 billion problem here, and it might be hundreds of billions, but you're still talking about $1 billion problem. Well, once Greece goes, what next? Italy's a $2 trillion problem.
Yeah, I think the Lehman Brothers situation is actually very appropriate here to talk about because they could have bailed them out, by the way. They let them fail. And at the time, I think it was Bernanke, he basically had the opinion that we're going to let them fail to teach the rest of Wall Street a lesson. What he didn't know is that by letting them fail, it spun out of control to where nobody could deal with it, and it crashed the market. So like Greece, I wonder if like the IMF and the EU and some of these people are like, well, fuck Greece. They can deal with it. They have to handle their situation. We're going to give them a bad bailout offer that they're not going to take, and they're going to vote a no measure, and we know they're going to do it, and just let them go. But I wonder what the ramifications are. Okay, I wonder what it is. I wonder if Greece fails and then the banking system has to absorb that debt, where do we go next? I think these guys are really playing with fire right here. I do. If I was in the parliament in Greece, by the way, I don't know what I would vote. I would probably vote no. If I was a Greek citizen. Solon, let me ask you that question, actually. If you were in charge, would you have Greece leave, vote no? I mean, what would your direction be on this whole thing?
Well, if I were a citizen in Greece, I would vote no. If I were in charge, I would, right now I'm leaning toward where Matt's going with everything, and that's Grexit. There's no coming back from this. It's very, I don't know why you would want to come back to this, because the EU is just giving ultimatums, austerity, austerity, austerity. You have to make more cuts. We're not going to help you out at all. From the 2012 bailout package, Greece got a pretty raw deal. They were forced to agree to 150,000 job cuts, which was about a fifth of their government employees was about 750,000. They were forced to cut 150,000 of them. They were forced to cut wages by 22%. They were forced to, that was across the board. They were forced to lower minimum wage, where, I mean, I don't know, I'll throw it around to you guys. What do you currently think that the minimum wage is a month in Greece right now?
Monthly?
I mean, if you haven't read it before.
I have not read it.
$1,500?
I would say
$5
$5.
A month?
$5 an hour.
$5 an hour.
I was going to say
so-
$1,500 a month, which would basically be like $8 an hour.
How much? Okay. Matt was a little closer. You're way off, Tim. It's actually
Wow.
680 euro a month, and it was dropped from 750. And that's what, when Tsipras was campaigning back in December, hey, we need to raise the minimum wage. People can't live off of 680. We need to bring it back to 750. And then all of a sudden, the EU was very vehemently against that. You start questioning, like, wow, what are we going to? Taxes on electricity are up to 20+%. Like, small businesses are complaining about their taxes that they have to pay, and they can't sustain it. So, I mean, it's best for Greece to exit the euro, as I mentioned earlier, have your own currency, focus on making the economy much more efficient, passing new labor reforms, but not just labor reforms, but things like enforcing contracts, making it easier to sign properties, things like that, the ease of doing business criteria, focus on each one of those, and then get down to cracking down on tax evasion, cracking down on corruption. There's a little thing in Greece called the fagilaki, which means the little envelope. And essentially, if you want to get anything done in Greece, you have to slip somebody a little envelope with money, or else you don't get any type of permits or anything like that. So you need to focus down on cutting that corruption down. So that's really the path that Greece needs to get on, focusing on reforms for doing business and focusing on tax evasion. And just by doing those two things alone, you can get to maintaining surpluses year in and year out, and maybe cutting down the welfare state, because I do not believe, even in the U.S., that 65 years old is a good retirement age, just because you eventually have a constantly aging population, and the Social Security system is a glorified Ponzi scheme. You have two to three people who are actively working, trying to pay the Social Security of one retired individual. And with healthcare becoming what it's becoming, with people being able to be more productive, live longer lives, be more productive longer into their lives, I don't think you can sustain a 65-year-old age of retirement. They are working on cracking down retirement, early retirement, and they have raised the age of retirement from 57 to 65 for men and 63 for women. But I still don't believe that's enough. I think you do have to go to the next step. Germany has it at 70. Norway has it at 70. You kind of have to increase the age of retirement, and it's going to increase the number of people in the workforce or who have to stay in the workforce, which isn't the best at a time of high unemployment, but it's cuts that you're going to have to start to look at, and we're going to have to start to look at that here in the U.S., because I can't see the U.S. Social Security system lasting as long as some people expect it to last. Some people have it collapsing in a decade. Others have it for going on for another 20 years, but definitely collapsing by 2035. So, I mean, those are cuts that they have to make. And then as for the EU, they're just going to go into multiple phases of QE. They're going to print probably another 4 trillion euro. I think they're going to print multiple trillion euro, definitely. But it's going to be somewhere high over there in that range, because they have to bail out not just countries, but corporations.
Yeah, a couple of things to that. Number one, I want to go back to something you said in terms of the measures that Greece had to agree with back in 2010-11, where you're talking about, cuts in earned income, cuts in minimum wage, all these different cuts. I mean, Tim, if you were to force that on the American consumer base, for example, what would our response be?
Well, I don't think we would respond positively, Matt, as a matter of fact.
I think we'd riot.
Yeah, I'm pretty much.
I think we'd riot.
Pretty sure, yeah. Yeah.
I think you'd see riots across the nation.
Yeah, the whole.
So that's number one. Go
ahead.
I
was going to say, I mean, the whole thing is fascinating when it comes to what Greece is going through right now and relative to what other countries are in the same situation. But we don't even acknowledge it. I think what you're talking about is right there too, because I don't think American citizens would put up with it either. I mean, we would not respond to it favorably.
No, we absolutely would not. And I don't think the Greek people should either, and that's why I think today is such a historic vote. I look at this situation right now, and honestly, I honestly believe this is the beginning of something. The Greece situation is not the end of something; it's the beginning of something. And I want to turn our attentions over to the world markets right now. How does this Greek situation play out in the U.S. markets? Just last week, for example. Last week in the marketplace, you basically had the S&P 500, which is our barometer of the markets, last week go from about 2,100 down to currently at 2,067. You had a gap down on the Greek referendum news coming out of last Sunday night. There's a lot of people that said, oh, nobody cares about Greece, nobody cares about Greece. We obviously care about Greece, given how the markets responded to it. So now we have a no vote coming out on in the U.S. Coming out of Greece. How does the U.S. markets respond to the uncertainty that Greece has really kind of laid out here?
Well, who knows? I think honestly, the market is going to crash when it wants to crash. It's overbought, it's overextended, it's been that way for years, and it needs to come back. It probably needs about a 30% correction, and I know that's a big number for people to hear out there, but I do believe it needs about that. It would require a big catalyst, and the banks and the institutions to be willing to sell it. Right now, Matt, though I can't really predict the short term because they've been manipulating this thing for so long. It's hard to know what's going to happen next week or next month.
It really is. It really is. But at the same time, given our experience in the marketplace, given how I think most of the market, not all of the market, but most of the market, I think they were expecting a yes vote. I honestly believe that they were just expecting that this agreement was going to get done one way or the other. And now that it's not, I mean, I don't think you can talk about it being priced into the market.
So you think tomorrow?
I don't think the market has priced in. I think tomorrow could be bad. Yeah, we don't know yet. We don't know exactly how the market's going to respond. We know that the euro gap down. Okay, it is not, we won't know until the European markets really open up later tonight. I mean, it is, what about midnight in Europe right now? But the markets are open right now. We know the euro gap down. It has not been buying since it opened. It gapped to about 109.80, actually about 109.90. Went up to about 110, close to it. Kind of selling off a little bit now. I can only go back to kind of last week when we got the news out of last week as well. And when you're looking at the news coming out of last week, the euro gap down then as well. But within about an hour, it started to recover, okay? And so, are we going to see that in the same capacity? I don't know. The euro's been, the euro gap down very similar last week, about the exact same movement, but instead of, buying, it's now kind of selling off down another 20 pips since the initial open. So it's going to be interesting to see kind of how the market does respond to this news tomorrow. But if we don't see a correction in the euro dollar over the course of the next, say, little bit into tonight, coming into tomorrow morning, I think it could be a nasty day in the market tomorrow.
Oh, maybe. Yeah, maybe. There's no doubt that I think there's the risk there. But quite frankly, the market has been so resilient for so long, it's hard to know when this thing is going to crash, Matt. It's really hard. That's why you kind of have to wait and see. It's one of those, just sit down, relax, wait for it. When it happens, it will happen. I've got a couple of metrics that I look at that I think are very important for everybody out there to understand. Percentages. Okay, if you don't get 2 or 3 days that are down 2 or 3% or more, you're not crashing. You can have the 1% down day, and it's going to feel red, and it's going to feel down, but that's not a crash. That's a business as usual day. My definition of a crash is, do the bankers on Wall Street take the train or do they take a cab? Okay? Because if they take the train to work, they're not that worried. If they take a cab to work because they got to get there and they got to, get in front of their desk, they're probably a little bit more concerned. We haven't had a cab day in a long time. And even last Monday with the gap, Matt, 2%. It was all. And nothing for the rest of the week. It is so resilient. As much as I believe the market is overbought and needs a haircut, it's not happened. It's not happened for a long time. And so you kind of have to wait for it. You have to wait till it actually does confirm it and does do it.
I agree with you, but at some point you also have to act. You can't constantly just wait for more information. To me, and you're absolutely right, the market going down 1%, nobody cares about that. Market goes down 2-3% consecutive days, people start caring about that. But even in the sell-off, say when the market started turning around in 2007, Tim, there was only 1, 2, 3, 4, 5, 5, 6, 7. There was only 7 time periods from the summer of 2007 to the end of the bear market, 7 times where the market went down 3 consecutive days, Tim. Only 7 times in that entire bear market did the market only go down consecutive days. Only 7. So I totally get what you're saying, but if we wait, then we're like, okay, at what point are we missing an opportunity here? Because we know the market's not buying right now. We know that. They're not selling.
No.
They're not selling, but we also know they're not buying right now because the market hasn't went up for, 6-8 months. Okay, currently the market is at 2067. At the very, very beginning of this year is at 2087. Okay, so we know they're not buying, right? We haven't had in the last. I think we've had 1, 2, 3 days since the beginning of this year. We've had 3 consecutive sell-off days, and last week was not one of them, by the way. So we know they're not buying. At what point though do you get bearish? At what point do you say, you know what, I want to go make some money in the bear market. I just don't want a cash flow. I want to go hit a home run. At what point do you say enough's enough that this thing's going to start selling?
Well, I've been bearish in certain instruments, and I'm actually very interested in going bearish on oil here very soon. I don't know if you guys have been watching this or have been watching the news out of Iran and some of the things that have been happening. Surprise surpluses out of the EIA numbers, and then Iran is potentially going to get their economic sanctions kind of lifted and then dump a bunch of oil on the international markets. I think oil, if it breaks down here, it could really go bearish. There are certain areas of the market that are much more bearish than others. Obviously, basic materials have been not great. Transportation, a lot of the airlines have been hit hard. The fact that the market still looks okay is really just a function of the big names in the market not selling off, like Apple and Google and those. Google's been neutral, Apple's been neutral. Stocks aren't doing great, but and indexes are really not performing well. When do I go bearish on the whole thing? Oh, I don't know. Maybe we should do it tomorrow. I don't know. Solon, what do you think? Should we just start selling this pig? What do you think?
Yeah, I really liked, there was a video that Noah posted a couple of days ago on Tackle Trading, and it was about switching your posture from bullish to bearish. He had a great point that usually when we do see historical corrections, they usually do occur in September, October. So it feels like a historical correction right now in the beginning of July. It's kind of early. But the good thing is we're starting to see the volatility pick up in the market. I do think that it's going to have this vote is going to have massive implications to what the market how the market's going to open up tomorrow. I do think it'll probably open up bearish tomorrow, and it'll be kind of interesting though. I don't see it really breaking down too soon, but we're going to see what it does soon enough. So I have it going bearish tomorrow, but really I would be alert for correction in September, October.
Mm-hmm. Mm-hmm.
Well, I, for one, am already bearish. I don't know if I will maintain that bearish standpoint. I think as a trader, we're fairly quick to adjust when we need to. But I went bearish 2 days ago I put options on IWM. So I went heavy bearish just to kind of see this play out. And again, if evidence comes out that says we shouldn't otherwise be that way, that's one thing. For example, if the market doesn't go down tomorrow, I'm not going to maintain my bearish stance on it because obviously you have to be able to adjust. But there's certainly September and October historically has been proven to be the months where you really kind of start seeing some volatile action. But to have September and October be those months that really historically are seen as the bear months, when bear markets start, it usually starts before that. Because it doesn't happen in a day. So tomorrow, I'm looking at some key levels on the market tomorrow. 2050 to me is a key level. If it breaks 2050, you're going to test 2000. If it breaks 2000, you're probably going to test 1850. And if you get down to 1850, at that point, Tim, you're talking about an 18% clip in the market. You're starting to talk bear territory there. So, it's just everybody's going to trade it a little differently. And you got to be able to adjust to what is working in the market. You can't just be so prone to say, hey, this is who I am, this is what I'm doing, that you fail to, see some, other opportunities out there. But, I think the 2050 level is a fairly important level historically for the market right now, and it's currently at 2067.
It's going to be fun, and we're also moving into earnings season, which also brings up a lot of volatility in general. It's going to be an interesting month of July. I think Solon might have it right on the head, though, later in the fall. The fall time, September, October, we've seen most crashes during that time. There's something about the groupthink, the psychology around knowing that there's a problem coming, and then when it happens, everybody jumps on.
You also see coming into the last of the year, institutions rebalance certain sheets. And it'll be interesting. I've always felt September, October is going to be a very important time, and and we haven't even talked about the Fed raising rates in this environment. Is the Fed, and that's a big question, whether or not the Fed is actually going to do it or not coming out of this now. But, if the Fed does raise rates coming into this environment, that's just going to put another massive volatile situation on the marketplace. I think, guys, honestly, I know people don't like to put their head out there because it gets chopped off too often, but, I honestly feel like we're sitting in at the very top of the historical shift in money. And, if that's the case, and if we're right on that, if I'm right on that, then it also represents a massive opportunity to the downside. I honestly, I look at this market, and I just keep looking at it, and I just don't see upward potential here. I honestly, I just don't. I'm having a hard time finding the catalyst that would be an upward sustainable. I'm not talking about the market goes up 5%. I'm talking about a sustained bull market. Somebody give me something out there outside of massive quantitative easing, and not just in the European, but on the U.S. front, that would keep the market going up. Is it going to be earnings? We haven't seen that. Is it going to be revenues? We haven't seen that. Is it going to be the PE ratios of the market? We're in the second or third most overvalued market in the history of our financial markets, and that dates back to the 19th century. And so, and if they do another round of massive quantitative easing, wow, look out ahead. I think that would be even worse down the road. So, it's going to be interesting, but I feel like everybody has an opportunity right now to protect their money, to protect their retirement accounts. I think it would be absolutely foolhardy for people with retirement accounts not to have insurance on them right now.
I think that's a fascinating question. What is the best case scenario? What is the actual plan here if you're a central planner?
Yeah, if you're the banker.
Yeah.
What's best case scenario here?
I think the best case scenario is that people continue to go to work and you have a flat economy for 5 or 6 or 8 years, and eventually the numbers can catch up with themselves.
Haven't we had a flat economy for the last 15?
No, they just don't want to crash. Honestly, I think bankers and central planners would call it a win if we don't crash. They would call it a win.
Here's the problem with that, though. They're idiots. Crashes are not bad. Crashes allow us to get back to some degree of sensibility. Crashes allow us to get back to a fair value. You know, best case scenario, if they just go away. That's best case scenario. If they literally tomorrow, if we woke up in an environment where we didn't have central planners to manipulate everything, and we got back to some basics, that's best case scenario. These idiots that we call central planners and central bankers are nothing besides theorists trying to play an active role in trading practicality instead of philosophy. It's ridiculous. We're being ran by economic theorists, people who have no business determining anything about anything in the economy. They're people who have theory, who play it out in reality, and it has an impact to real people's lives. And what they've created was a foundation where the best case scenario is economic stagnation. That's the best case scenario, is that if we just stagnate. Oh my God, win-win. Good job, central planners. Thumbs up.
What else are they planning on, Noah?
No, that's what I'm getting at. They're not planning on anything. That's my whole point. They're just praying for it not to crash. Their number one strategy is let's close our hands together, bow our head, pray to the gods that the end of the world doesn't come, and it gives us enough time to fix the problem before disaster actually does come. It's foolhardy, it's ridiculous, it's asinine, and the biggest problem is it's playing around with people's lives, with their livelihood, with their retirement. And you know what? If this was 400 years ago, Tim, you know what would have been done? Draw it and quarter, buddy. Braveheart style. Unfortunately, we can't get away with that in social media today.
I don't think we can. And by the way, Braveheart was such an overrated movie. That movie sucked.
Go home. Let's go home. Let's get out of here. What are you talking about?
I did love the
Tim,
fight.
Hold on.
I did love the fight scenes.
1.7%.
Okay.
1.7% short Apple stock. 1.7% of the world shorts Apple stock.
Yeah.
Okay? You are on the 1.7 percentile with Braveheart right now.
Well, let me ask you a real serious question. I'm not going to try to be a dick about it, but I'm going to ask you a question. Did I need 45 minutes of Mel Gibson in his 40s acting like he was in his 20s, running around some village, throwing rocks at dudes?
Could have been 45 minutes of Mel Gibson at 65 being the racist he is, and I would still watch Braveheart and enjoy it.
I love some Mel Gibson shows. Okay, I do. I did enjoy quite a few of the movies he made. Payback.
You rip on Lethal Weapon now?
No. Payback is one of my favorite movies of all time. But, dude, Braveheart was not good. I mean, you can't tell me it was very good. You just loved it because you were 18. You were an 18-year-old kid. You loved like the violence of it. You are completely misinformed on this.
Rising up against tyranny is a bad message today. I think it should be the proper message today. And yes, listen, Producer Phil, if you and Tim align yourself in movie speak, that tells me a lot about you, because Tim has horrible taste in movies and he has horrible taste in clothes. Those two things.
First of all, I was told.
We're not even going to talk. We're not even going to talk about this. We're not going to talk about this.
Yeah,
we're moving on. Okay, we're moving on. All right, Braveheart is a top 20 movie of all time. All right, Braveheart's top 20 movie of all time.
It's not one of the top 20 movies in my dumpster right now. Okay.
You're also the guy that cherishes the second and third.
I'm not putting in the top 20.
It's awesome. You're the guy that puts Kill Bill Volume 2 in one of the greatest movies of all time, and it's Tarantino's worst movie of all time, and shouldn't even be ranked in the top 500 movies. You know, you're also the guy that puts the second edition of Matrix Revolutions as a great movie. Are you kidding me? This is a guy that says Matrix Revolutions is a great movie, Kill Bill 2 is a great movie, but Braveheart's bad, and I'm just supposed to sit there and just act like you are just, just savant when it comes to movie, understanding a quality movie?
Listen,
No.
We all hear
I'm not
it.
gonna buy
We all hear it, brother. It's okay. You don't have to throw away your copy of Braveheart. Go watch it tonight. It's cool. Sit down,
I'm gonna watch it despite you.
And
you know
I'll
what I'm
tell
gonna
you,
do? I'm
the
gonna start
first
chanting
45
freedom.
minutes.
That's what I'm gonna start chanting.
Okay, you tell me the first time you actually see something interesting in that show. It'll be about an hour and 10 in. Okay, it is the most slow, boring movie ever.
No, the council at the very first of the movie where they're talking about going to war with England. That's and they're coming together in different tribes. That's fascinating. Have a guess. When what's his name?
Okay.
The I can't remember the guy's name who plays the uncle of him. Brian Cox comes and he gives him the movie and he's like, all right. It gives him the sword. He's like, you want to learn how to kill somebody? Well, let me teach you.
Yeah.
And come on, it's a fast. And then the French princess falls in love with William Wallace and is killed. How do you not fall in love with William Wallace and is killed?
If you said, Tim, you can sit down and you can watch Braveheart, or you can go long the Euro. I would have a hard time. I don't know. I don't know what I would do.
Well, I don't even like that analogy. That's
okay. On the topic with movies with huge, I want to get your guys' take on another movie with huge political impact. What's your take on V for Vendetta?
V for Vendetta. I'll let Tim go first since he's the movie expert.
First of all, I think it is a very, very good movie. It's a great film. I love it. I'm an anarchist at heart, Solon, so the idea of rebelling against the state and also wearing a really cool mask, I love it. The movie was great. Yeah.
I thought it was a very good movie. Yeah. Not great movie, but I thought it was a good movie. Any movie with Hugo in it, who plays V, going to be a win in my book. Except The Matrix.
Yeah, I love it.
Yeah, it's a good movie. There's a lot of good political movies out there, but V for Vendetta, that was a good one. In fact, I'm going to go on I'm going to download like 5 political movies. I'm going to watch them on my next plane trip.
First of all, Braveheart is not a political movie, and the fact that you're trying to put it in with V for Vendetta makes me want to come to Harriman and slap you. Okay?
Listen, I honestly, I don't know if I have better things to say about Janet Yellen right now or you. See, I just don't get it. I don't get it. Braveheart's a great movie.
Oh, God.
If you polled 100 random people, they would say Braveheart's a great movie.
Listen, it was entertaining. I mean, I do like watching a bunch of Scottish guys pull their skirts up and show me their ass. It's fine. Like, that's cool. That was the best part of the movie. But outside of that, I had nothing to do with it. And
well, it's got an 8.4 IMDb. It's the 79th ranked best film of all time, according to IMDb.
Yeah.
Reservoir Dogs is right in front of it.
Okay.
Star Wars Episode 4, Return of the Jedi, in front of it. Vertigo in front of it. Aliens. Mad Max, Fury Road, WALL-E, American Beauty, Dark Knight Rises, Django Unchained, The Shining.
Django, by the way. Did you say Diego?
No,
that's
Django.
Dora the Explorer's cousin.
I said Django.
You didn't.
Doctor Strangelove. Great movie, by the way. Everybody should see that one. Apocalypse Now. Is Apocalypse Now a political movie?
Yeah, probably.
Then you can't say Braveheart's not. You can't say Apocalypse Now is a political movie.
Well, no, I don't think
it's not.
No, actually, no.
What about Gladiator? Is Gladiator a political movie?
I don't think Apocalypse Now is a political movie. I think Apocalypse.
So you are going to go back on what you just said 5 seconds ago?
Yeah, I'm thinking about it.
Fit your
argument.
argument?
I think it's more about existentialism and philosophy.
Oh Lord! Now
you're
getting
movie.
Big words so nobody understands.
Bullshit.
Come on.
Okay, do you know the book Heart of Darkness, Joseph Conrad?
Yes.
Okay, Apocalypse Now was made after that book. It's more about searching your inner soul It's not a political movie. Okay.
Listen, does it have to be only one thing? It has political themes to it.
Sure.
Apocalypse Now has political themes to it.
Right. You can have kids in the movie and be smart.
Martin Sheen goes on some soul journey seeking when he sees the crazy person doesn't mean it's only about, getting into your inner soul. Man, you're such a hippie sometimes.
Oh, Solon, do you know what I deal with this guy?
What about Gladiator?
Braveheart. What else do you love, Matt? Tell me some things you enjoy.
Gladiator. What about Gladiator? Gladiator, a good movie?
Absolutely a good movie.
You can't say Gladiator is a great movie and say Braveheart sucks.
I loved it.
Yeah, I love Gladiator.
Gladiator's great. Is Gladiator a political movie?
No.
Whatever.
Why is it that if you have something to do with history, it has to be politics?
What about Saving Private Ryan? Is that a good movie?
Yeah, it's really good, actually.
It's a great movie, right?
Yeah.
Okay. So all these others are great movies, but
I'm looking
not
at the
Braveheart.
AFI.
Yeah?
To Kill a Mockingbird's on the list for AFI.
I thought I saw that one here too. They're top 10 movies of all time. Top 10 movies of all time. This is on IMDb.
Yeah.
Shawshank Redemption, number 1.
First of all, say that again and say it right.
Godfather, number 2.
If you say Shawshank Redemption, we can't have a conversation about movies.
Godfather, Part 2, number 3.
Right.
The Dark Knight, number 4.
No, that's bullshit, by the way. I love that movie, and I loved Heath Ledger in that movie. It is not a top 10 movie of all time. The only reason it is up there is because that kid killed himself, and that's it. There's no reason why that is a top 10 movie. We don't know if
Heath Ledger killed himself.
Well, whatever. Like he OD'd, whatever.
Drug overdose.
Yeah.
Pulp Fiction, number 5.
Think about the plot in that movie, Matt. No, I'm not going to let you go past that. It's not that good of a movie.
Dark Knight's top 100.
It's
top 100.
It's a good movie. But top 10 of all time? Are you kidding me?
Okay, is it one of the number 1 comic book movies of all time?
Well, first of all, the fact that there are comic book movies...
Okay, hold on.
Says a lot about
one of the number 1 comic book movies of all time.
I think the original Batman was better with, Jack Nicklaus.
That wasn't the original Batman.
Nicholson.
Batman dates back to the 60s, homeboy.
Golfer or an actor.
Whichever one you want. All right, but I'm going to tell you that The Dark Knight is one of the best comic book movies of all time. And if it's one of the best comic book movies of all time, you have to put it at the top of some list, because comic book movies over the last 10 years are what movies are now.
I don't agree with that.
You can't just because you don't like them that much. Okay, it's been comic book movies are literally some of the most highest grossing movies of all time. Highest grossing movies of all time. You can't just say because it's not my genre, it's not great.
Transformers 4 is also one of the top grossing movies of all time, but that does not make it a good movie.
Right.
No, you're right. I didn't say every comic book movie. I didn't say every comic book movie is great.
That's the argument you're using, though.
I didn't think Transformers 4 was great.
First of all, we have a Phil sighting. We just pulled
Phil.
Phil
Take it any longer.
Yeah, he could not handle it anymore.
He wanted to get his Transformers comment in. Okay, not every movie made is great. Not every military movie is great. Not every drama movie.
But you have a top 10 list. Okay. It's top 10.
Listen, I'm just saying there's a lot of people that would disagree with you guys.
Okay, read number 1 again.
On the list.
Start back. Right back. Start over. 1. What's number 1?
Shawshank Redemption.
Thank you.
The Godfather. Can you disagree with The Godfather?
No, I like both.
It's probably the greatest mafia movie of all time, right?
I don't know. Maybe.
Does that mean every mafia movie I ever made is great as well?
I think Goodfellas.
I would take Godfather over Goodfellas, but Goodfellas is great too.
They're both really good. Yeah.
All right, number 6. Okay, because I got no problem with Pulp Fiction being there. Number 6, Schindler's List.
I can't say anything. So.
No, you can't, because it's going to be offensive to too many people. Okay, moving on. 12 Angry Men. The
Beautiful
1957 Henry Fonda one, not the one with Vin Diesel in it.
Great movie.
I know Vin Diesel's action.
I can already think of better movies from the 50s and 60s, though. I like Spartacus and Ben-Hur, and I love.
I'm sure they're on the list here somewhere,
but they're not.
They're just not 10. Okay, yeah. Number 8, The Good, the Bad, and the Ugly. 1966.
I can think better Clint Eastwood movies than that.
Yeah, 1966 though. Number 9, The Lord of the Rings, The Return of the King.
Yeah, I agree.
It's a great movie.
No, I love it.
Although it's not even the best one in that bunch.
Yeah, I was going to ask that.
Two Towers is.
Second is pretty good.
Two Towers is
the
best
whole
one.
thing is beautiful, actually.
Well, I think The Lord of the Rings: Return of the King is just getting the vote for the. Oh well, The Fellowship of the Ring is number 11, and I'm sure the other one. Okay, we're going to go to the top 25 here. We're going to see if we disagree. Number 10, Fight Club.
Doesn't travel well. I got to be honest. I love Fight Club. Fight Club.
It's cult-like.
Really?
First of all, it's a cult movie, and I have read Planiak. I think I've read 10 or 12 of his books, and I love them. And I love the movie. I love the idea. I love the storyline. But 20 years later, I kind of think it's 90s bullshit. I'm not gonna lie. I'm not sure. I love it.
Your existentialism BS all the way.
Because everybody says that movie's about Nietzschean existentialism.
Yeah.
I thought you would love that.
I do love it.
Dude, you are all over the place. You have no identity right now.
No, I do. I actually, first of all, back up, guys.
You're like a bad politician right now. You say one
I've
thing
read Fight Club 5 times. I've seen the movie 100 times. I have loved the movie, but I kind of think that it was just angry 90s bullshit. I don't think it travels well. I don't think it carries through the ages. Honestly, I don't. I'd rather go back and watch Groundhog Day than Fight Club. I would rather go back and watch Groundhog Day than Fight Club.
I could move Fight Club up from 10. I could move it up to 5 or 6. I think it's that good. I think it's better than the first Matrix. No. All right, number 12, Star Wars: Empire Strikes Back. Number 13, Forrest Gump. Anything bad about Forrest Gump, T?
Jenny, I'm gonna run down this road, and then I'm gonna catch some shrimp on a shrimp boat, and I'm gonna do everything in the '60s that you can imagine. That movie sucks.
Oh wow, wow. Okay, do that again. All right, Jenny. Come on. Inception, number 14, Leonardo DiCaprio.
Full movie.
Goodfellas, number 17.
Great movie.
And Matrix, number 18.
Okay.
You have Star Wars all over in the team.
Everywhere. Well. Okay, first of all, Matrix, when I saw it in the theater in the 90s, maybe the greatest thing I'd ever experienced in my life. Do you guys remember the advertising for the Matrix before it came out?
Yeah.
There was nothing. You had no idea what it was.
Yeah, I didn't see it in theaters.
Oh, me and Mikey went. It was amazing.
I remember that.
Yeah.
What about rounding out, we'll go to 25. 7 at 22, Silence of the Lambs at 23.
Love that movie.
Both of them really, really good. 7's one of the best horror movies of all time. So is Silence of the Lambs. Both of them great, great movies. Which, Phil, does not mean every horror movie is a good movie either.
7
The Usual Suspects at 24. 7 does not... What are you talking about? You are losing all credibility right now. All credibility you have utterly lost. 7 sucks. Fight Club is overrated. I think this is an anti-Brad Pitt stance you're taking right now.
Okay. First of all, Silence of the Lambs probably needs to be in the top 5. So the fact that it's at 20 makes me think this list is bullshit. And the other thing is the Usual Suspects, amazing, unbelievable, absolutely better than half the movies we've talked about. The fact that Braveheart is above The Usual Suspects, I don't respect this list.
Braveheart is not in front of The Usual Suspects.
Did you say it was
No, Braveheart's in the 70s.
Okay, good.
so you can stop losing your mind for a second.
All right.
Usual Suspects is great, no doubt about it. It's one of the best movies of all time. Most of these movies on the top 25 are pretty decent.
Benicio del Toro in that movie, he made his whole career off of that one role, honestly. Do you think he would have got hired as many times as he had if he didn't play that role?
I don't know.
No, he wouldn't have. Dude, he was awesome. And Kevin Pollak, awesome. Kevin Spacey, awesome. Dude, that show...
not awesome right now?
What?
Damn, currency market's flying. Just in the last 25 minutes, the dollar yen went from 122.25 all the way down to 121.80, back up to 121.12 all in the last 20 minutes. Euro dollar really starting to pick up some bullish steam, currently at the 110 level. If it breaks 110, I'm getting out of my position. Reminds me a little bit about what we saw last week now.
Gosh, dang, the euro.
That's what happens, dude.
Yeah.
That's what happens. All of a sudden, I start talking about, movies and whatnot, and look what happens.
Wow.
Currencies start flying.
Has anyone seen Citizen Kane? I need to see that.
Yeah, Citizen Kane's great. Wow, dollar yen already up 122.35.
I can already name like 10 movies that you didn't name that are way above these movies. Okay.
Listen.
If you're a film guy, first of all, how do you not put like One Flew Over the Cuckoo's Nest on there?
I'm sure it's on the list, homeboy.
It was on past list in the top 10.
Right.
Yeah, I'm sure. Same thing with a lot of those old.
What about The Wizard of Oz?
Shining's on the list.
Dude, The Wizard of Oz is probably one of the greatest movies ever, whether you love it or not. It annoyed me as a kid, but it is one of the greatest movies. You didn't name that.
It's 193 on the top 250.
No
on
way.
The AFI, Wizard of Oz is number 6. Because this IMDb list is made by voters or users.
Dude, some algorithm just pounded the euro dollar.
I'm watching it, yeah.
It spiked all the way to 110.40. It's coming back down.
You got me worked up, Matt.
It's 4 o'clock and it's pounded.
I love it. All right, so Solon, I'm going to ask you a question.
Sure.
How do you fix the situation in Greece, long term?
I thought I was going to get a movie question.
No.
I thought the movie question was going to come too.
Nope.
Tim wants to end on some content.
Okay. So, long-term solution for Greece is, there's 2 options: staying within the euro, using the euro, which there's going to have to be major concessions from the creditors. There's going to have to be a massive write-off of debt. It looks like consensus is plus 30% has to be written off, and have some kind of, I don't want to say deferment, but there's going to have to be some kind of grace period where Greece is just paying back principal, because realistically that's where all the conversations are going to, from the IMF to the U.S., both saying the same thing. Same with a lot of economists. I know Joseph, Stiglitz has been saying it. Paul Krugman, a bunch of other guys out there have been saying the same thing. Greece needs to get a massive write-off, as well as an extension of maturities, as well as deferment of interest. And then internally, the number one thing that you have to do is crack down on tax evasion. Once again, the statistics are out there. They're letting about 25 to 40 billion euro go uncollected, which is a huge portion of their economy. That's not money that they can give up. If you look at the U.S. shadow economy, the U.S. shadow economy is at around 8%. The U.S. does a great job of collecting taxes. Germany does a great job of collecting taxes. That's why there's been back and forth ribbing by Schäuble, by Germany, that they should just lend tax professionals and auditors to Greece to help them fix that up. But that's definitely a place where Greece can improve. And hey, you can create jobs in that specific area, which is kind of a win-win. Collect more taxes, create jobs, get people working. So that's beneficial to them. So also improve the ease of doing business. There's a lot of things that they can improve there, such as obtaining permits, enforcing contracts, which isn't as great. I work in the legal field, and we say that the U.S. judicial system is screwed up, and it takes forever to get anything done. But it's a hell of a lot better than the Greek judicial system, and so a lot of other developed countries as well. So they can improve that. Yep.
Love it, Solon. Really quick update. The market just opened up, Tim, in Solon, and we're down 1.5%, down 30 points off the close of Friday. Broken support levels at 2050, broken major support levels at 2040. It's going to be interesting to see what happens off of the open. The cash open doesn't happen until tomorrow, but buying off the low a little bit, opened all the way down around 2035, up at 2039 currently. Expect some volatility, guys. I don't know what's going to happen from here, but if we open tomorrow where we are currently at, and again, there's a lot to play out here. The last time the market was this low was in March of this year, which was about 4 months ago, and the time before that, it was all the way back to last January. Currently, for the year so far, if it opens up where it closed, or where it is right now, the market will be down close to 46 points from the open of the year. Look out, guys.
I like it.
Yeah, look out. It's time for everybody to get educated. That's why we have tackle trading, right?
Oh, 100%. I mean, that's the whole point of having a community, that we can talk to each other with, and the whole thing. I love the conversation. It's really appalling to me that Matt has such bad taste in movies, and
right.
One day, I'm gonna give you a good playlist, and you can watch it.
You and Phil can go hold hands, go watch your horrible movies together, and talk about how everybody in society has bad taste but you guys. Go put on your bad outfits and watch your bad movies, and go do whatever you do.
Yeah, Phil has a good point.
Who says we haven't? Yes, he has a very good point, actually. Very good point. Oh, Solon, thank you so much for coming on here to discuss the Greek situation with us. Obviously, there's a lot going on, ladies and gentlemen, that we're going to keep you posted here at Tackle Trading. We're going to have videos, blog posts, and make sure that you guys are aware of everything that's going on out there, because we are going through a historical change. Whether you're talking about the currency situation, whether you're talking about the economic situation, or whether you're talking about just retirement accounts and the financial markets in general. As a student of history, I love history, and I love living through history. What I don't love doing is watching other people out there getting slaughtered because they don't understand the financial markets. You do not have to be a wizard, ladies and gentlemen. For anybody out there listening to the podcast, you do not have to be from Wall Street. You do not have to be a financial wizard to take control of your financial life. What you need to do is you need to make a decision that the responsibility is on you. The responsibility is on you to provide for you and your family, to make sure that the people you care about are taken care of. And if you can make that decision, then you can learn how to do this the appropriate way. You can learn how to trade. You can learn how to invest like the pros do. You don't need to be the expert. You need to have experts on your team. You need to surround yourself with people who've been there and done that. And that's what Tackle Trading can do for each and every one of you. Tackle Trading can help you guys understand the financial markets, can help you understand making money in the financial markets, can help you understand what is going on out there so that you can prepare and then take advantage. Protect the things that you work so hard for. Protect those retirement accounts. Grow those accounts, not traditionally, but doing it yourself. Through cash flow strategies, through protection strategies. But for the love of God, do something, because if you just sit back and you act like the proverbial consumer and you wait and you wait and you wait, there's one guarantee that's going to happen. You're going to lose. You're going to lose money in your retirement accounts. You're going to lose value of your fiat currency, and you're going to lose the most precious the most valuable commodity, the most valuable asset of all, and that is time. And that is the one thing that all of us have is time. And do better with your time. Learn how to trade, change your life, get in the game one trade at a time over there at Tackle Trading. Obviously, the podcast, Trading Justice Podcast, 5-star rated Trading Justice Podcast. That is, you can reach that on iTunes amongst various other avenues. Phil, if you can type those in, I'll announce them. If you like the podcast, you like what we're doing on a weekly basis, guys, go ahead and leave us a nice little review over there at iTunes. Help us promote the podcast a little bit more. You can also review the podcast. Go ahead and subscribe to the podcast so you can get automatic downloads that tune in and at Stitcher as well. So iTunes, TuneIn, Stitcher, however you do it. I download it I subscribe to it on a podcast app on my iPhone. It automatically downloads it, and all of a sudden I can get the beautiful, beautiful message of Tim at these horrible movies and his horrible movie reviews. But you know what he's not horrible at? Trading. Okay, and that's what you're here to listen to us about. So, Tim, final words. Solon, final words.
If you refuse to let them go, I will send a plague of frogs on your whole country. Exodus 8:2.
Boom, done. Cancel it out. Solon, last thought.
It's been fun. A lot of fun talking about the markets. Looking forward to doing it again.
Awesome. Solon, number 3, first time in the podcast history. There you go, buddy. This is becoming a reoccurring theme here. We're also close to podcast number 100, I believe. What episode are we currently on, ladies and gentlemen?
97.
I believe we're on
we're going to have to do something special for 100,
so
Matt.
Is this 97? This is going to be 97, so we have 98, 99. We'll do those both next week. Probably do one this week. We got to do something special for 100. We got to bring on, 4 or 5 or 6 of our favorite guests. But come on, you only reach triple digits one time, buddy.
Let's have a party. Let's bring everybody on. Let's have a party.
Let's bring them all on. Let's have a party. Yeah. Awesome. Yeah. Producer Phil starts setting that up. That's probably going to be for about 2 weeks from now, so let's make sure it is a big, big, big deal. Let's make sure the birth of the Trading Justice Podcast at 100.
I do have a final thought, actually. Yeah. I have something I want to say.
I thought Exodus was the best way to go out.
No, it was a good one, but what I will tell you
is... Revelations now?
No, what I'll say is something very, very introspective. Okay, yeah. Art is internal, and whatever you enjoy, Matt, you can enjoy that. If you enjoy your movies the way you enjoy them, and they touch your life and make your life happy, great. But what I want everybody to understand out there is that you should read, and you should listen, and you should listen to music, and you should watch movies, and you should trade, and you should experience life. Absolutely, absolutely embrace it. Enjoy the journey. We can debate about it later. Matt will mostly be wrong, and I'm okay with that. No, TJ Podcast, we're out.
Later, everybody.
Later, guys.
You've been listening to the Trading Justice Podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice Podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.